Hello and welcome to the video for cash flows from investing. In today's video, we'll be looking at what cash flows from investing are. We'll also get our first look at a variable known as capital expenditures, as well as we'll take a look at how to calculate that variable. We'll also take a look at how we calculate cash flows from investing, at least the overall portion of the cash flow statement. So to begin, we'll first take a look at the definition for cash flows from investing. The definition is simply stated as the cash flows generated directly from different investing-related activities. So these will be cash flows that look at maybe lending, look at potentially any investments into the company. So we'll take a look at some of those common types of investing cash flows. The first on this list is the purchase or sale of fixed assets. So we're looking specifically at PP&E. If you're familiar at this point, hopefully with plant, product, and equipment. Any investments into research and development, so any money that the company spends on research and developing its products. The purchase or sale of securities, in this sense, securities are looked at as purchasing any types of stocks or any other investments within another company, as well as any lending of money, so potentially lending to other companies if they have money. Bonds would be looked at in this category. And so now we'll take a look at capital expenditures. So capital expenditures is also denoted as CapEx, and that just tells us how much the money is investing in fixed assets, which are then used to grow its business. And so we have the equation here for CapEx. It's looking at the change in PP&E plus our depreciation. That addition of depreciation is because, as we've talked about in other videos previously on, specifically the depreciation amortization video, depreciation is a non-cash expense. So as we're looking at those cash flow statements, we want to adjust for those non-cash expenses, as well as the change in PP&E is obviously the change in our fixed assets as we're looking at our plant, products, and equipment. So here we have a very simple look at a cash from investing activities, or at least the specific portion in the cash flow statement that's looking at cash flows from investing. So let's break it down real quick so we can build up that CapEx example. So we'll see here in 2023, there was a purchase of $18,000 for our fixed assets. And then in 2024, there's a purchase for $2,000 in our fixed assets. So when we're looking at this and we look at the change for our fixed assets or change in PP&E as we're looking for that specific variable in CapEx, we want to make sure that we're pulling the right number from this investing cash flow statement. The change wouldn't be a change from 18,000 to 2,000. As that would be around 16,000, which isn't what we actually changed the fixed assets by in 1 year. The change is actually just the $2,000 in 2024 because that's how much we purchased or how much cash we used to purchase our fixed assets. And then we again have this income statement we've seen previously with our depreciation from earlier videos at $667. So now we can build out the CapEx equation with our change in PP&E and our depreciation. So our change in PP&E, as we stated in 2024, was that $2,000. So we added $2,000 into our PP&E or our fixed asset column. And then there was depreciation during that year of $667. So just a very simple equation. We just add those together. We get $2,667. In this video, we'll now take a look at how do we calculate cash flows from investing. So the best way to do that is to just run through an example and show you exactly how those calculations are made. So we'll first read this off. The company you are analyzing has purchased assets for production for $50,000, and this would be considered capital expenditures. Additionally, they purchased $10,000 in securities. So they invested $10,000 of their own monies by purchasing $10,000 worth of securities, and they made $5,000 from the sale of other investments. So we need to answer the question, what are total cash flows from investing activities? So we see here the $50,000 is taking away cash. So it's very important when you're reading these cash flow statements to go in and make sure you understand what's happening. So in the event that we're looking at spending money, that's actually money leaving the business. So we need to denote that as a negative value. So we're purchasing an asset, so negative 50,000. and then we're also adding on the negative 10,000. So we purchased 10,000, so that's cash leaving the business. So it's a negative value. But then we also sold $5,000 worth of securities or other investments for the company. So that's money coming in. So that's going to be a positive $5,000. So then if we take all that information from the example, we'll go ahead and find that our total investing cash flows were negative $55,000. So at first glance, we see this negative $55,000 or negative $50,000, and we see a negative cash flow from investing, and that may appear to be a red flag for the company. But what we really want to make sure is that we're understanding where that money's going, exactly how it's being used. So it's not always the case when we see a negative cash flow in investing that it's a negative thing towards the company or a red flag. So it's really important to determine if that negative cash flow is helping generate cash flows in the future. So going back to that example, we saw that they were purchasing $10,000 in securities. Maybe those securities, they think that they can get a return that's going to outweigh the amount that they're spending on that investment, so they'll get a positive return on that investment, as well as that $50,000 that they purchased on fixed assets. Potentially, the amount of money that they're spending on that fixed asset will yield a return, so the products that they can make out of that fixed asset or the way that they use that fixed asset can actually bring money in the future into the company. So we just need to make sure that we're understanding where that money's coming from or where it's going, so we can better understand if those negative cash flows are going to be a bad thing for the company or if they're actually setting us up for future gains.
My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Vieve Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the Center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.